Well, hi and welcome back. We are going to talk about gold and Bitcoin. What's going to happen next week? So next week on Wednesday, we have the Fed funds rate. This will be the key trigger for the markets and the start of increasing volatility from there. So the reason why I want to make this video is because Bitcoin, let's start with Bitcoin and then we start with gold. Bitcoin had a pattern, a very live test situation in the weekly candle. It was very similar to the structure of the death of the bubble, and Bitcoin canceled its death right in time. So the recovery in Bitcoin is still showing a potential for going up to 26, but basically it failed. If you check the weekly this chart, you will see here that Bitcoin tried to get above this level, but have 3 consecutive days of going back to the very dangerous area, which is between 19k and 22k. This area is extremely dangerous for Bitcoin. Bitcoin went back to this range, so Bitcoin will be playing the Fed fund rates game this next week. So if you see that Bitcoin going higher above this level, it will blow up to 27. But Bitcoin was given 3 consecutive days, and this is quite dangerous for Bitcoin. Should Bitcoin fall below this target, everything is possible, 50k or much more. So this is a very live situation. That's why I made a video about that pattern that was very dangerous. The good story about gold and xaguusd is that gold had very strong rejection of this area, which is 1670. Gold is not giving a reason to believe that it will continue to go down below this crazy and cheap level. So gold recovered from this level, but to say that it's safe now, gold has to go about 1750.50, which is the key level, and gold is also trapped in the next week range for survival. So gold could go all the way up to this area to find and to get some people and to bull trap people there. That could be the most important, like this candle here, and then you get the rejection and they go up again. This could happen again. It was in 20, and you could see this rejection again. This movement could be repeated right here. So gold is dangerous, and the key to play this is to follow gold, go to see what happens in that area. The very important key level here for gold is the area of 1720. That's the area that is completely weak, and you see gold going down in the daily charts, it will most likely go below 1700. So that's the trade for gold. That's a real reason why you don't have to be square in one strategy, and you have to understand the dynamics of what's going on. If the markets are very aggressive and we see a crash of gold below this key important level, which is gold is not giving signs so far that it could crash below this level. There are not there, and should it happen, all bets are off for gold, and gold could continue to go up to the area of 15k, 1500. That would be the area that Morgan Stanley gave in the last quarter of last year. So you see the structure for the forward curves are showing that the US dollar will be strong in the second the second part of the year against the euro, but the euro is showing some resistance. I will show you now the forward curves, and you will see that the forward curves imply the Federal Reserve is showing high strength with this website, which is very cool to check the forward curves. And you will see now that the markets are pricing a 3.5% tops for the end of the year in the United States. So this is the chart, and this is where the Federal Reserve dots are, where the Federal Reserve checks the 1 month dollar LIBOR, and you see that the markets believe that the rates will go up to this level, 3.6. Now let's go and check what is going to happen with the euro market, the European market. And the European market has a very high inflation, about 7%. And the thing is that if you check the forward curves for the European market, you will see that there's a very, very important signal, the relationship now between the US dollar and the European area, the Eurozone. You will see that despite they have massive inflation, they won't fight enough. So there is some strength for the US dollar and some potential for the US dollar to keep attracting carry trade funds to the United States, because the European Central Bank is not going to fight enough to fight the inflation. So we will have inflation in the United States, and they will stay in negative rates. It means that happened in Argentina. What happens is that the people keep spending because they sense the negative rates. So the inflation may continue, and the key to crash the inflation in the United States is they crash the energy prices, and crude oil had a recovery, and it is not quite clear what will happen with the crude oil market. So we have to check what happens next week and expect a huge volatility in August, because Bitcoin is in very dangerous pattern, and whatever happens outside this pattern, things will blow up. So we are going to a crazy August. It will be awesome. And the same thing we have for gold the next week. If gold goes all the way to 1757, then we have a massive explosion for gold on August and September. Should gold go back and fails to go about this level, most likely we have a complete destruction of gold between July and August and September. What I believe in gold, I believe gold should have, I see more upside risk than bearish signs for gold, because we are getting closer to the strength, the strongest part of the year in the seasonal charts, which is September. So this movement, I tend to believe that the worst is behind for gold, but I could be wrong, and that signal will happen if gold fails to go above this level. So thank you very much. I hope you enjoyed this update. See you next time.